giant Exxon Mobil faces a financial squeeze as OPEC Plus ramps up production, sending shockwaves through the energy market. But here's where it gets controversial. While Exxon's earnings took a hit, its production numbers are breaking records. So is this a temporary setback or a sign of deeper troubles in the oil industry? Exxon Mobil's third quarter earnings report, released on Friday, revealed a 12% drop in net income to $7.55 billion, or $1.76 per share, compared to the same period last year. This decline comes as no surprise, given the significant plunge in oil prices, largely driven by OPEC Plus's decision to increase production. To put it in perspective, U.S. crude oil prices have plummeted by approximately 16% this year, with President Donald Trump's tariffs adding to market jitters about a potential economic slowdown. And this is the part most people miss. Even as Exxon's profits shrink, its production is booming, particularly in its offshore assets in Guyana and the Permian Basin. Excluding one-time items, Exxon reported adjusted earnings per share of $1.88, slightly missing Wall Street's expectations. Revenue also fell short, coming in at $85.3 billion compared to the anticipated $87.7 billion. Despite these challenges, CEO Darren Woods highlighted that Exxon achieved its highest earnings per share during a quarter with declining oil prices. However, the company's chemicals business faced bottom-of-cycle margins, further denting profits. Now, let's dive into the numbers. Exxon's production reached a quarterly high of 4.77 million barrels per day, BPD, with its Guyana operations surpassing 700,000 BPD and Permian Basin assets hitting nearly 1.7 million BPD. Breaking down the earnings, the production business contributed $5.68 billion, refining brought in $1.8 billion, and chemicals added $515 million. Exxon's capital expenditures for the year stand at $21 billion, with 2025 spending expected to be slightly below the lower end of its $27 billion to $29 billion guidance range. In a move to reassure investors, Exxon returned $9.4 billion to shareholders during the quarter and increased its fourth quarter dividend to $1.03 per share. But here's the million-dollar question. Can Exxon sustain its production growth and shareholder returns in the face of volatile oil prices and increasing market pressures? As the energy landscape continues to evolve, Exxon's strategy will be closely watched. What do you think? Is Exxon's focus on production growth a smart long-term strategy, or should it prioritize cost-cutting and diversification? Share your thoughts in the comments below.